Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. This time we're diving into Cathay General Bancorp's latest proxy statement. Think of it as their annual report card, but with a bit more legal jargon. Will this be a glowing review or will there be some areas needing improvement? Let's find out. This report is packed with information that every shareholder should know. Who's up for election to the board, what they're paying their executives, and what their plans are for the future. It's like peeking behind the curtain to see how the company is really run. First things first, the annual meeting is set for May 12, 2025. Stockholders will vote on key issues, including electing directors and approving their executive compensation plan. Basically, it is a chance for them to decide who will be running the show and how they'll be paid. 4 Class 2 directors are up for election, including the Executive Chairman, Dunson K. Cheng, and the President and CEO, Chang M. Liu. There's also Shally Wang, retired from IBM Greater China Group, and Elizabeth Wu, a professor at USC. Here's a little twist. Shally Wang is currently a Class I director, but she's being nominated to be a Class 2 director. If she gets elected, she'll resign from her Class I position. It's like musical chairs, but with board members. 2 directors, Kelly L. Chan and Joseph C.H. Poon, are stepping down, so there are a couple seats opening up on the board. One of the biggest proposals is to approve an updated version of their incentive plan, their program for rewarding employees. They're asking to extend it for another 10 years and increase the number of shares available. Stockholders also get a chance to give an advisory, meaning non-binding thumbs up or thumbs down to the executive compensation. It's like saying, hey, we like what you're doing, or maybe you should rethink those bonuses. Finally, they're asking stockholders to ratify or approve the appointment of KPMG as their independent accounting firm. This is a standard procedure to ensure financial transparency and integrity. Moving on, let's take a look at who owns the most shares of Cathay General Bancorp. BlackRock Inc. holds a whopping 15.22%, followed by the Vanguard Group Inc. with 11.79%. It's always good to know who the big players are. Now, let's talk about the nominees and continuing directors. Dunson K. Cheng, the executive chairman, has been with Cathay Bank since 1982. That's some serious commitment. Chang M. Liu, the president and CEO, brings over 30 years of banking experience to the table. These folks are the key decision makers, so their backgrounds are important. Shally Wang has 40 years of IT experience, which is super valuable in today's tech-driven world. And Elizabeth Wu brings her expertise in accounting and auditing, so it's a pretty well-rounded group. Okay, a little bit of housekeeping. Some officers were a bit late filing some ownership reports with the SEC. It happens, but it's something to keep an eye on. Transparency is key. Let's move on to how they manage risk. The board is responsible for overseeing risk management, and they have committees dedicated to this, such as the Risk Committee, Audit Committee, and Compensation Committee. It's all about making sure the company isn't taking unnecessary chances. 10 out of the 14 board members are considered independent, meaning they don't have any conflicts of interest that could cloud their judgment. Having a majority of independent directors is a good sign for corporate governance. Now for the part everyone's curious about, executive compensation. Cathay General Bancorp aims to attract, motivate and retain top talent, aligning executive interests with those of stockholders. The goal is to reward performance without encouraging excessive risk-taking. Here are the main players or named executive officers whose pay is being scrutinized. There's Chang M. Liu, the CEO, Hung W. Chen, the CFO, Dunson K. Cheng, the executive chairman, Kim R. Bingham, the former chief risk officer, and Albert Sun, the chief credit officer. They've got a mix of strategies to determine executive compensation, which include base salary, short-term bonuses, and long-term equity incentives. The plan is laid out here. Base salaries are fixed but can change based on performance and competitive pay. The short-term incentive bonuses depend on financial targets like EPS and ROAS that vest over time. Also, clawback rights allow the company to recover compensation if something goes wrong. It's like saying, if you mess up, we're taking the money back. Bonuses are tied to EPS, return on assets, ROA, and individual performance. The long-term equity awards, those RSUs, depend on EPS total shareholder return compared to other banks and ROA compared to other banks. They also benchmark their pay against a peer group of similar-sized financial institutions. However, they don't target a specific percentile for pay. For 2024, some of the executives got a 3% raise, including the CEO, Mr. Chen's salary, however, was decreased by 14%. Based on 2024 performance, executives received bonuses between 77% and 89% of their target. Liu received $826 and Chen received $396,800. Chen received $496,800. To determine how much restricted stock a person gets, that's the RSUs. They review a report that Frederick W. Cook & Co. prepared. The goals are based upon an absolute EPS metric, TSR, and ORO, as compared to companies on the KBW Regional Bank Index. The directors also get compensation. Non-employee directors get an annual retainer of $55,000 plus fees for attending meetings. The lead independent director gets an extra $35,000. In 2024, Kelly L. Chan earned 102,250 N fees. Nelson Chung earned 104,250 50 ads. And Felix S. Fernandez earned 144,750. These independent board members are well compensated for their service. It is stated that the awarded shares will be calculated at the average price and to be held by the non-employee directors. They also consider executive compensation history, observing past pay ranges for reference. This also provides insight on potential future awards. Scroll Kim R. Bingham's Teagues. Let's shift to the potential payouts if there's a change in control. Here it outlines what the executives would get if the company was sold or taken over and their employment was terminated. These agreements are designed to keep executives focused during uncertain times. A quick note on taxes. There's a limit on how much of an executive's compensation a company can deduct for tax purposes thanks to Section 16(2) Nov of the Internal Revenue Code. The CEO needs to hold shares worth 3 times their annual base salary. That's a pretty hefty investment in the company's success. Finally, if you share an address with another stockholder, you might receive only 1 copy of these materials. It saves paper and money. One last table. It shows the number of securities authorized for issuance under equity compensation plans as of December 31, 2024. This gives you an idea of how much equity or stocks and warrants the company might issue. So what's my take? Signified General Bancorp seems to be navigating a changing financial landscape, seeing modest declines. Management is emphasizing cost control and strategic growth, which is probably why executive chairman's salary was reduced. The bank appears on solid footing but must adapt to stay competitive. The risk lies in navigating a volatile market. However, their strong community ties and history could provide a buffer. Overall, Cathay General Bancorp presents a mixed bag, like most companies. I hope this helps. Thanks for watching. If you enjoyed, please subscribe, like, and comment.